start if you are in a situation of a cash flow challenge? Well, the first thing I'm going to ask you is, please, let's sit down and work out your personal budget. What is it that you spend on a monthly basis in your private capacity? Why do I want to do that? Well, because if your business can't sustain your private requirements, you're going to have a really torrid and stressful time trying to conduct business. So I like to start with your private expenses. But I know we do this generally on a once-off basis. But I want you to do it, ladies and gentlemen, on a month-to-month basis for 12 months. Take into account every single expense. If you don't know what they are, maybe a good time now to analyze your expenses from 2 months ago and see how your money is being spent. Because we need to know where we are before we know where we're going. So I will do it on a monthly basis. I will be realistic. I will even budget for bank charges. I will budget for interest on my overdraft. Since about 2000, the cost of life insurance has gone down. So if I'm paying too much money for my life insurance, surely it makes sense for me to review my life insurance portfolio. There may even be some money in there that you can use for your business. Don't worry about being ripped off, because they have to fill out a replacement questionnaire. And in that replacement questionnaire, you and I will be able to see whether the change, if there is any, would be to my advantage rather than to the salesman's advantage. So that's one area I would have a look at in my cash flow on a personal budget. The other area that I find is very interesting is my short-term insurance. Now, on the 31st of December, midnight, your car value depreciates. So I know what happens in Gauteng. On the 2nd of January, your insurance broker phones you up and says, Thayn, your car value has gone down. Can we reduce your premium? No, it doesn't work. So it's up to you, ladies and gentlemen, to look at every single item in your expense and see where it is you can reduce it, or at least manage it. So instead of having pizza every Thursday, have pizza every second Thursday. But you can't do this on your own. You need to have your family or your partner involved, because I really believe that this is where a lot of our problems start. Now, on a month-to-month basis, what it's going to do, it's going to help you identify those months where you have exceptional expenditure. So, for example, and I know we all do this punctually, on the 1st of October, we pay our SABC TV license. So, in those months, then I put those expenses in. So I can see what my needs are versus my expenses. Because once I've done this, ladies and gentlemen, I will then go and do exactly the same exercise in my business. And then you write down every expense. And again, what I want you to do is see if you can reduce those expenses. But here's the catch. Do not reduce your expenses if you are going to compromise the quality of your product or your service. Do not reduce those expenses. And I love the saying, a clever man will always try to save some money. Do you agree with that? But a wise man will also try to save time. So be both. Try, when you're looking at this expense item, see if you can save time and money. So those of you, Terry, that are still on dial-up internet, it might be very cheap, but it's going to take you forever to download those files you need. Have a look at your premises. Maybe you can sublet. You must make sure that you comply with your lease agreement. So don't just sublet. Make sure your landlord allows you to sublet. So all those kind of things, ladies and gentlemen. And also, we insure our cars. We insure our houses. We even insure our plant and equipment. But the one thing that I find as a financial planner with the Financial Planning Institute is that it's difficult to get clients to ensure their ability to earn cash flow. If you are disabled, ladies and gentlemen, not for permanently, but for 6 months, can your business operate? Can you generate cash flow? And Amesh, what's it called? Permanent health insurance, eh? or income replacement insurance. Now what happens, or overheads expenses, whatever they call it, each company has their own product. But what happens is you pay them a premium, and then they will pay you some cash flow while you are temporarily disabled. But we insure our cars, but we find it very difficult to insure our lives for some reason. Premiums tax deductible, by the way. Okay, so when I do my cash flow budget, ladies and gentlemen, I want to be realistic. Now you'll see in the top of the screen there, the total sales is 20, 20, 20. What's wrong with that? It doesn't work like that. We might have 20, the next month might be 30, then we might have a 10. So when you do your cash flow planning, I want you to be realistic about it. If you can have a wonderful month in December, put a bumper month in December. If you can have a terrible month in February, put a terrible month in figures down for February. But the top line is the salesman line. I'm not too hassled about that this morning. But what I want you to concentrate is that line there, which is cash flow. That's the money that is actually coming into your business. So even though I sold 20, I might only get 10. So in my cash flow forecast, I insert 10, ladies and gentlemen, in my income, not 20. Because I'll take off all my expenses and I'll end up with a net positive cash flow or a negative cash flow. And in my example, I know there's hundreds of these on the internet, but I have an opening and a closing balance. So I can see what my closing balance should be at the end of every month. Again, please, monthly, go through those expenses. So when you're looking at your expenses, think of alternative ways to save time and money, ladies and gentlemen. Stock. I know what happens is we get a quote from a client, a supplier, and for the first year, we'll shop around for 3 quotes. But after that, it's the same supplier and he's always good. So we just use the same supplier. Check each and every line item and then project it through to January to December. I used to be a magistrate in Johannesburg many years ago. Napoleon was a corporal, I'm sure. But in those times, I realized that when you wrote out a check and the check bounced, you actually committed fraud. And if your supplier or your person you wrote the check out to was grumpy and he wanted to prove a point, you could go to the police and charge you for fraud. The law at that time said you are presumed to have committed fraud unless you can prove that you didn't write the check out intentionally when you knew there was no money in that account. So what would happen is I would stand in front of the magistrate and say, sir, when I wrote the check out, I was expecting money from a customer and I thought there's going to be money in my account, and I wrote it out on the strength of that, and I'm so sorry, the customer didn't pay me and therefore it wasn't intentional. In that case, you would probably get away with it. But imagine the embarrassment. Imagine the time wasting at the court purely because you didn't check your cash flow. So from those days when I left the Department of Justice, I then decided I check my cash flow every single day. 21 years later, I'm still checking my cash flow every single day because it's become a habit. So this thing of doing a cash flow statement for 1 year, it doesn't work. You need to do it on a month-to-month basis. Now, can I tell you one little secret? I even do my cash flow on a week-to-week basis. I took 6 months of bank statements, and my wife thinks I'm crazy because she says, geez, now you're going paranoid. I said, no, I'm managing my cash flow. Took 6 months bank statements and worked out my cash flow. So I knew that my income at the beginning of the month was low, in the middle of the month was high, towards the end of the month it was medium. And then I took my expenses and I plotted my expenses against my day-to-day cash flow. And then I found out, ladies and gentlemen, that in the end of the month where I had most expenses, I had little income. And you know what happens in the middle of the month? You look at your bank account and you see, wow, there's some money there. And that Samsung S3 looks very good. So you go and you buy that thing and you suffer at the end of the month. It's like when you buy that car with a star on it. Do you know that very often you get car sickness? There's a feeling in your stomach at the 31st of the month when you have to pay the installment. Okay, so when you're doing your budgets, I don't want to tell you to do a weekly budget, but honestly, a yearly budget does not cut it. And in your budget, I clearly want you to have a salary for yourself. So you're happy with that? On the simplybiz.co.za website, this spreadsheet has also been uploaded with that file called Gross Profit Calculator. So if you can't find another one, you're welcome to use that one for free. Okay, so the next thing is this pricing issue. Now, when I started my business, I don't know if you guys did the same thing. I thought, well, those guys were charging 250 Rand an hour. So I'm going to charge 200 Rand an hour. You did that, huh? Or I'm going to sell hamburgers for 20 Rand because those other guys are selling them for 25 Rand. Now let me ask you the question. Because you were cheapest, did everyone rush to your door? No. So pricing is not only about being the cheapest. It's not only, ladies and gentlemen, about being the cheapest. You have to take into account 3 C's when you price your product or service. The first C is very definitely you need to price to your market. You need to price to your customer. So the price for a corporate will be different to the price for an individual. The price in Gauteng is very different from the price in Clarence in the Free State. So you are very much at liberty to adjust your prices according to your customer base. The second C that I find is very important is you've got to know what your competition is charging. You have to know what your competition is charging. But to base our pricing purely on competition is very dangerous. Because if I am going to be buying burger patties and bread and tomatoes and lettuce, I will not be paying the same price than my competitor is paying. So I might be paying 40 Rand a kilo for the patty, he might be paying 30 Rand a kilo, therefore I cannot compete in the same way. So I have to take into account what my own costs are. Consultants, those people that sell time. Who's with me? We sell time. So how do you do your pricing? Well, a lot of people say to me, Thayn, I'm not too sure. So here's a technique that I used. I said, well, find out how much it is you need to earn, your break-even point. So in my example, let's say you need to earn 360,000 Rand this year. So I'd like you to break that down into a monthly basis. So if I'm going to have to earn 360,000 Rand in a year, ladies and gentlemen, how much must I earn per month? No, not 30. Do not divide by 12. Because in December, no one wants to talk to you. They're on holiday, they're going to Plett or Durban. Guess what? Easter is dead. So there's no point in budgeting for periods of time where you don't have any control over that. So I would suggest you divide by 10. So when you're pricing your time, divide by 10, then divide by 4 weeks, then divide by 5 days, then divide by 8 hours or however many hours you work. And then you get an hourly rate. And that hourly rate is your minimum, ladies and gentlemen. Now you can shop around and see what it is you can increase the hourly rate by. If I'm selling burgers, you must agree with me that the cost of a burger is not just the patty and the tomato sauce and the lettuce and all those good things. Every single burger you sell must contribute, must give some gross profit to pay those fixed expenses. The rent, it's got to make a contribution to the rent. It's got to make a contribution to the water and lights and the salaries. So when you do your calculations, work out, okay, my cost of goods is $5 for the burger. But as an example, you may say, well, I've got 10,000 Rands worth of monthly expenses. And I think I'm going to sell about 1,000 burgers. So surely each one of those 1,000 burgers must contribute 10 Rand to those monthly expenses. So the cost of your burger is not 5 Rand. It's actually 15 Rand. And now you can go to the competition and say, okay, he's charging 20 Rand a burger, I'm charging 15. Now I don't mind if you go in at 19 because you've done the costing exercise.